Well, Dan French joins me here today, and you can learn more what his team is up to by going to atxacquisitions.com. Of course, it's going to be a clickable link in the show notes, but really appreciate your time today, Dan, as we talk about acquisitions and what your team is doing in that multifamily space.
Yeah, it's a pleasure to be on with you, Jack, and I've listened to a number of your shows. I think you do a great job and hope to provide some value to your audience here.
Well, I appreciate you taking the time to listen. Well, I'm always interested. We got to start things off. We're going to do a very truncated version of this, but how did you find your way into this niche?
Real estate. Yeah. So it's been 20 years and time flies when you're having fun, I guess. But so it doesn't feel like 20 years. But, so when I was younger, I felt called into public service. So that's what I was doing in my early career. It was my full-time passion and what I felt like was my vocation was to go into public service. And this is kind of an experience that I think is related to my age during 9/11. So 9/11 impacted all of us in the U.S. and really around the world, but particularly the people of my age. I was around 20 years old, and I felt like a lot of my friends went into the military service, and I applaud that, and I'm very grateful for people who did that. But I didn't feel called to do that, but I did feel called to give back and be a part of the solution, and that kind of put me into a spot where, in addition to that, I unexpectedly lost my dad. He lost a battle with cancer after, so it was an 11-month battle. But so I didn't know I'd be back in my hometown, so I wound up back in my hometown and really pursued this career in public service. And that was really my passion for a while. For 7 years, I was an elected official. But during that time, I felt like I really wanted to, put something for the future. I wanted to plant some seeds, and that way I'll harvest that in the future. And that's how I got into real estate investing. And I was lucky enough to get involved with my business partner, who I'm still in partnership with for 20 years. He approached me with his brother. So this guy, Pete Rex, who I'm still with, and his brother, Rob, approached me to go into real estate investments. And this was like small deals, 4-unit buildings. And before you knew it, we had a portfolio of them. And really, that's how I got my start. So I feel like that's a path where a lot of people can probably feel or understand some of the passion that I was, kind of going toward. So let me pause there. So maybe you want to unpack some of that.
Yeah, it'd be interesting. You mentioned public service. It was an elected official. What type of role was that?
So I was a councilman in my hometown, the place where I grew up from when I was 7 years old, up in New York. And I became a councilman, did that for 5 years, and then became a town supervisor, which is basically the same, and to feel so drawn to it, but it all happens for a reason. And so concurrently, I got very active in the real estate world, though. And this is like 2005, right? So for your audience, a long time ago, before the great financial crisis, in a way that you can buy deals. You can't even buy deals the same way anymore because the restrictions on the debt side were much different back then. So we put together a big portfolio with, quite frankly, not a lot of equity. And before you knew it, we had this 100-unit or so portfolio, feeling like we're very smart, on top of the world. And then the GFC, the great financial crisis, of course, comes. The recession comes. People are not paying their rents. We're in trouble almost immediately. And really, that was the genesis of my knowledge of real estate. Like, I had a vision that it would be very passive. Almost immediately, it really was not passive. So I was going up there and handling stuff on my deals on our properties to do a good job. And then when the GFC hit, it became even more, almost like another full-time job. And we were fighting on for dear life to save the properties and just pay the banks and scramble and restructure loans and do whatever we had to do to kind of save that portfolio, which we managed to do. We didn't go bankrupt. We avoided the worst of it, right? And we restructured all of that and essentially just lived to fight another day. I lost a lot of my personal money, but we paid all of our small investors back from that whole period. But really, my mindset was like, let me put something away for the future. I wanted to have a big family. I now do have a big family. I have 4 kids, and that was the genesis. That's how I got involved. And I was lucky enough to have a partner who really pulled me into it. And I really, over time, I caught the bug. So I call it the love of real estate. I saw the things we had done wrong, and I knew that we didn't have to continue doing real estate that way. I knew there was a better way, and there's a happier part of the story in the middle of it. But let me pause there, Jack, and see if you want to.
Well, I'd be curious as to, and we won't go into your political leanings, but I would be curious now, after 20 years of real estate, has your political standing changed at all?
Good question, man. From the real estate regulatory side, I would say I'm much more cognizant of just business friendly. So put social cultural issues aside. I have my own thoughts there as well, but just I feel very, and this is experiential now too as well. I've lived in many different states, right? I'm from New York. I lived in Tampa, Florida for 6 years. I lived in Austin, Texas for 2. I lived in Bellevue, Washington for 2, which is near Seattle. Then now I'm back in Texas for 3 years since COVID. And I see firsthand like the public policy space has a huge impact on people's lives. And a lot of that is through real estate. What is the property tax, state income tax? How are all the services being paid for? And so I really would I would say I've come to really admire this, like the Florida and Texas style, which is like, let people do more with their own money. Let's not have a huge giant state government. We have a giant federal government. Like, why are we having huge state governments? To me, it doesn't make sense. Like, let's let the people flourish. Let's let capitalism do its job, and mostly stay out of that. And if you want to have the opposite experience, go to New York City and look at rent regulation and what it's done to the market there. It's completely distorted the market in a way where people, they don't know how to invest there. It's really upside down if you're aware of that. But anyway.
No, I appreciate you being so open about that. It's one of those examples too. You're talking about being more in local politics. When it comes to this type of thing, I think that's where people can have the biggest influence. We get so distracted by these big races, but in the end, it's the local politicians that really can make a difference in their own community.
Yeah, it's similar to having stewarding investor capital, right? Which is a very big responsibility. So if someone gives you their hard-earned money, I don't care how wealthy they are, they can be an ultra high net worth or they can be barely accredited. To me, it doesn't matter. It's still someone's hard-earned money, and they're placing it with you because they trust you as a faithful steward. The very same thing, applies to government, and I think a lot of our public servants don't really have that mentality, unfortunately. They're not like trying to stretch the dollars. They're just trying to have their pet projects done, and or feed their constituency with whatever they're pulling them toward. And I was always of the mind of like, it's all about good government and sort of like lean government. Do the most you possibly can with each dollar, and I think that I try to carry that forward into stewarding people's assets.
That's really good to hear, especially, you mentioned that you had an upturn where the story gets positive. Could you share some of that?
Yeah, the good news is always more fun to tell, but between 2011 is when I really joined my partner, Pete Rex, full time. And I moved down from New York to Florida. The decision there was that I lost a big race when I was 30 years old. I lost this bigger race. I was going for higher office. And I thank God every day that I actually lost that one, because it opened up the door for me, to go full time into real estate, which was becoming increasingly more of a passion for me. And I was seeing what Pete was putting together down in Tampa, the beginnings of what became a vertically integrated real estate investment platform. We built all the acquisition side, the property management, construction side, built the whole thing end to end. And I was a very early joiner, and I became a very early partner in that business. And it went from, I saw it go, buying very small deals to buying 17,000 total apartments. And so that was about over $2 billion in total asset value. And we were betting on Florida and Texas coming out of the great financial crisis. And that turned out to be a very good trade. And we've done very well on those deals. But in 2019, we put the pause on the buy side. We stopped buying. We thought it was too much of a frothy market. And we completely shifted strategy, which not a lot of people do. if they have one strategy, they tend through inertia to just keep going and just keep plowing forward, even though the market cycle has changed. And I think your investment strategy and approach needs to change along with it. So by 2019, we had decided to sell. We became net sellers. We sold about $1.5 billion of that portfolio. So we still maintain some of the assets from that older, real estate investment firm, but primarily we've returned most of the capital and locked in a really good track record for ourselves and more importantly for our investment partners. So that would be a 22% IRR over a 2x equity multiple over that time, which is basically a top quartile return profile. So
you said return most of the capital. I would imagine that means that you some of that capital was still held up in some of the existing portfolio that you kept.
yeah, some of the stuff that we're still stewarding the assets from our last fund that was deployed. The last one deal that was deployed into that fund was 2019. So we're still working through that, and I'm very in touch with all those assets, and we like them still. So we're just playing that out, doing portfolio management and setting them up, many of them for long-term hold.
When we first started the conversation, you mentioned that you started buying small multifamilies, 4, 6-plexes, that type of thing.
Right.
Where does your strategy lie today?
Yeah. So now we have, so that firm is basically not buying anymore. The firm that between 2011 and 2019, did a couple billion. Now we're buying. In 2023, we started a brand new real estate investment firm called ATX Acquisitions. And it was just a lot easier to just create a new firm. But it's largely the same team. So Pete Rex, same founder, myself, I've been with Pete, like I said, for 20 years. Our CFO is with us. Her name is Rachel Ridley, 10 plus years with our team. A guy named Chris Green has been with us for over 8 years. So we're a very seasoned team. We've worked together for a long time. And we target deals that are much bigger now, not 4 or 6 units, but rather 100 unit plus is what we're going for. And really target markets would be all throughout Florida. And then within Texas, we like DFW and Austin a lot more than, any other markets in Texas.
So, you also mentioned that you built out this vertically integrated business, and you mentioned property management, the acquisitions and some other things. What came first? Like, was obviously over 20 years, was it a slow grow, or did you realize right off early on that you had to establish these other businesses?
Yeah, that's a really good question, Jack. And I think specifically in 2011, when we were trying to think about scaling that company and we knew we were pretty well capitalized at that point, which was rare for teams because capital markets had really frozen up during that time. People were very fearful. Like we're seeing some of this today, right? Fear, uncertainty, and doubt, never good for markets. And a lot of people choose to stay in cash or just stay on the sidelines until they figure out, like, where is all this going? So we were actually one of the groups that became very well capitalized and able to buy deals very quickly. But what we dealt with then was a completely different kind of distress. Like today, what we see from a distress standpoint is more financial distress, right? People bought deals at a very high basis during this kind of exuberant period after or during COVID. So before rates dropped, people were paying crazy cap rates for deals, right? So they're from a basis standpoint, they're very high. They're locked into a very high basis, meaning they paid a lot on the buy side. And then they also put in floating rate debt, right? So to me, that what we're seeing now unfold is a financial, it's a financial, like, not meltdown, but the challenges from a financial asset side, because real estate is really truly a financial asset based. It's mostly debt, right? What we saw back then was a different type of distress, more of a physical distress. Like, especially in Florida, I was there, boots in the ground, taking over deals that were largely, some of them left for dead. And so some of them that we bought in the really early period were bank owned. So called like REO, like real estate owned. The bank would take back these assets from owners that couldn't pay their debt, right? And just completely had handed over the keys to the bank. And we took those on in the early days. Later on, by 2018 and 19, those had disappeared, right? Because some capital had come in, like ours, and replenished or I'm sorry, rehabbed, like refurbished, and brought the property back to life.
Mm-hmm.
So that's kind of what we were doing in the early days. And that's why, to answer your question in a long-winded way, that's why we built out a property management and construction management operation, because we knew we had such a specific play, deep distress to begin with, and then later on value add. So to pair up our operating capabilities with our strategy, we felt like we wanted to own it end to end. We didn't want to trust that really difficult, scrappy entrepreneurial construction rehab turnaround project to just anyone else. We wanted to build that team ourselves and staff it with people that we trusted. And that's what we did.
Just to remind everybody, if you want to learn what Dan and his team are up to, head over to atxacquisitions.com. And if you found some value in what we're talking about so far, do us a quick favor and share this with one of your real estate investing friends. And if you're watching us on YouTube, give us a like and a subscribe. So, Dan, I'm always interested, particularly regarding the property management. We're not going to talk in detail there, but I've always found, and this is just from experience, property management and real estate investors, our interests, frankly, are usually not aligned. Did you find that being the case? And if so, is that one of the reasons to spin up your own property management?
Yeah, this is its own podcast, and I think so. Really, the genesis of our team, when we sold so many assets in 2019, 2020, and beyond, the deal was that we were vertically integrated, like I explained. So we only operated for our interest, our properties that we had an interest in. So ResProp management actually grew out of that platform, and it became a third-party provider for other owners. So it grew up in its DNA as a group that really was understanding that property management is all about maximizing the asset value, right? It's not about like getting fees and having your staff be getting size and scale. It's just about maximizing the asset that you have, because that's why we built the property management team. So when we transitioned and sold off so many deals, like I said, we grew back up in unit count. And now we're back up. ResProp management is back up to 14,000 units. So that's again now about $2 billion in asset value in today's pricing. So we deeply understand as ResProp management, property management, that there's conflicts of interest that you point out. And this is what makes it tough, right? Because ResProp or any property management team is looking to do, they're looking to be profitable as a business. But if you take a more enlightened approach, like we try to do, it's like, man, if we don't have owners like screaming from the rooftops that we are the best in the business, then they're number one, they're going to go away from us and go with someone else, and number two, they're not going to refer us to anyone else, so we're going to be stalled. So we think that we have an advantage in our DNA, the way that we built out, the way that we understand what it means to maximize an owner's asset, that we just carry that forward as a company, and it's really deep. It's got to be a passion. So I'll pause there for now.
Well, I think what's interesting too is that since you're providing this type of service to another investor, it kind of gives you an inside track as to other opportunities. You already know how these properties are being managed, and you could possibly leverage that list as an acquisition aspect through ATX.
Yeah, I've heard that before, but I think you just have to mitigate. We're very careful to have our ResProp team, especially from a business development standpoint. They don't tell us when they're working with an owner, tell us being ATX Acquisitions, when they're working with a different owner on a deal. I never know that, because they don't share that information with me or with anyone on the ATX buy side. So that is one area where people are afraid of a conflict of interest, that ResProp with its business development team, which we have a couple of people strictly focused on trying to grow unit count, work with different owners. But I've this kind of very, very strict wall is a real thing, and
Okay.
we keep it really, really sacred, because trust.
So how do you? No,
Yeah.
I completely understand.
Mm-hmm.
How do you source your properties today then? Is it through brokers? Do you find off market? How do you find them?
Yeah, we have a bunch of, we don't do like direct mail campaigns at the moment. We've done that in the past before in a little target submarket, but I've seen that work. But nowadays, I think that the best deals, quite frankly, are the ones that are marketed, and I can explain that. I think when people are floating an off market deal, largely it means they don't have to sell. Right. So they're just looking for some magical number that would be like, I call it like the Godfather number, like the offer you can't refuse. Like if someone kind of threw a number over the fence at me and it's a Godfather offer, boom, I'm going to take that. And I think a lot of the off market looks that I've seen are just the pricing expectations are completely irrational, and maybe someone will pay them, maybe not. But I find that the people who are using a brokered transaction are ones that typically they need to get out. Either their LP is forcing them to get out because they have a fund or something else that the life of the fund is over, or they're in financial distress, meaning they were trying to survive till 25 and pray that the Fed was going to make a move this year. It hasn't made a move. Things haven't really gotten any better for people. And now they're out of time. They're out of options. Maybe they already capital called. Maybe they already did a cash in refi, or they're looking at one and they can't do it. So I find it to be the just broker relationships are the best avenues for deal flow at this point.
Yeah, that tracks with even in single family homes, in the experience we've had, and that's where we kind of mingle in primarily, is that those people that are selling direct, for sale by owner, they are trying to look, typically they're priced unrealistically, and they even want the realtor fees. They don't even want to share those. So some of the people in my type of work, chasing those people down, I've yet to have one shake loose. They're almost impossible to talk to.
Yeah.
So on your website, you talk about technology and disruption, and I find that the word disruption is a bit of a buzzword. Can you talk a little bit about what you mean by that?
Yeah. So, it starts from the very top of it would start from the fact that real estate, and this is by the data, but it's basically a laggard, and construction, same thing, right? It's a laggard in terms of its adoption and use of technology and how it's transformed our the way we do property management, the way we do asset management, the way we do portfolio management, the way we find deals. Of course, it's part of the fabric of what we do now. Obviously, I'm not going to argue that, but in terms of how it's transformed our industry versus other industries, I think it's night and day. Just look at the car industry. Electrification of cars, way different. Self-driving stuff is coming. Whereas in real estate, if you look 30 years ago, people staffed a 300 unit property basically the same way, right? 3 people inside, 3 people outside. And that means like 3 sales staff and 3 maintenance staff. Now, people, I think once they're tooled up with technology that is a little bit more, that's going to help them, leverage their own capacity in different ways. I think that's going to completely change our industry, but that can only happen if we build tech in more, efficient ways, like mobile first. That really has not hit our industry. A lot of what we do in the industry still is behind a computer. It's completely desktop oriented. And, if you go through, again, any other industry, the travel industry, hotels, everything else is much more like tech forward. And people, once they're tooled up, we're going to see the whole cost structure of the industry is going to change. And the 3 and 3 model to do a 300 unit property is going to completely change. It'll go to 2 and 2, then it'll go to like 1 and 1, and you're going to be able to leverage external work a lot more simply and more cost effectively. But these are kind of big 10, 20-year visionary ideas. I mean, we have an eye on it, and we're actually through a different company called Rex, the Rex ecosystem of companies. We're building some tech products to go after some of these issues.
Yeah, technology in real estate investing has always been interesting to me, and it seems like it's like a rubber band in some ways. We got people who just don't use any of it, and they could definitely see a benefit using it. And then you have run into some people who use it to an extreme, to the point where they're trying to become as passive as possible, and then wondering why it doesn't work. Whereas I think it's got to be like in that middle ground where what you're suggesting, it's kind of augmenting that human activity and that human behavior, that human interaction more than anything else.
Yeah, totally, totally. Call that like human in the loop. You're never going to have. It's still going to be a very highly personal thing, and really, so from the sales standpoint, there will I think still be some human in the loop, but again, one person could do the work of many of three people if things like self touring really becomes commonplace. If a lot of the admin work is achieved through like an AI bot experience that you don't even know is an AI, right? And I think that's the people on the other side of it want a living experience that's not going to be hurting their wallet as much. And technology drives down costs. It's deflationary, really, at the end of the day. So that's why it's so important. Not it's got to be a good experience for the customer, but if it's going to help drive down rental costs vis-a-vis their household income, everyone wins.
Yeah.
And that's a good day for people.
Well, it's one of those things too. We hear a lot about AI, chat GP, the large language models, that type of thing. When it comes to real estate, I think where people are missing the boat is some of the niceties around summarizing content and a few other things that let you ingest some details or some information quickly instead of all of the human interaction. It's great to feed a legal document into chat GPT and say, summarize this to me. And then I can get the gist of it in a couple paragraphs.
Just the beginning, right? Like,
That's just the beginning. Exactly.
yeah, it's great.
Just to remind everybody again, check out atxacquisitions.com. Before we move into the rapid fire questions, Dan, is there any question or concept you think we should have covered here today?
I think the state of the market is always very interesting, and I can inform some, like, just give my take on what's
Sure.
happening right
Yeah,
now.
that'd be great.
Yeah, so I think 2024 been a little bit more active than 2023 in terms of listings, and part of that I do believe is because people are starting to see, like, current owners of assets are starting to see, like, good news is not actually on the horizon. Like, they don't even know when the good news is coming. So this whole like survive till 25 mantra, it might just be that might be going away. So people I think that were holding on for like better news, and the Fed doing its thing, maybe with a rate cut, they're going to start putting their deals on the market because they're forced to. So I think that's a good thing for people who are trying to get a little bit more greedy on the buy side. And we take like a Buffett approach to investing. It's like, other people are fearful. Okay, great. Now it's time to get greedy because we feel like we can buy at a great basis. But yeah, so I think that's an interesting thing. I'm in touch with a lot of brokerage teams that are saying, hey, we're working with tons of owners that are just, they're getting forced to do it. And so I think at the end of the year, we're going to see a lot more transaction volume, and that's why we're trying to be, we underwrite every deal in Florida, every deal in Austin, every deal in DFW. We're really up to speed on the market and what's happening. So that's my take.
Oh, that's a good take. And I think one of those things too is that I don't know if you have an opinion on the commercial side front, but in my area of the country, I'm still seeing a lot of storefront malls and the like almost abandoned at this point. And if somebody can unlock the key on what to do with that type of property, I think there could be a windfall.
Yeah, I don't track that as closely. I think office is a whole, from a secular
Different animal.
standpoint, it's a beast, and I wouldn't touch any of it personally. But some contrarian person will come in, or a group, and they'll do well in certain markets, and they'll buy it at the cost of 20 cents on the dollar, and someone's going to do well.
Yeah.
It's not going to be me, but
Well, this is a great conversation, Dan. If you're ready, we'll just jump into the rapid fires.
yeah, let's do it.
What lie do real estate investors tell themselves and sometimes to others?
I think the lie is that the market will bail you out, or the future is always brighter. Blue skies are always coming. I think people forget that that there's black swans out there that they're not even aware of, and then the role that debt markets play and cycles, it doesn't always go up.
Mm-hmm. Do you have a book recommendation, or what are you reading right now?
Yeah, I always recommend the gospel. That's foundational. But from my favorite book recommendation to give to people is, it's hard to get through, but the Buffett, Berkshire Hathaway shareholder letters, just go through one by one, 50 or 60 years of them maybe now. They're really fascinating to read, and such like homespun investment, decision making and wisdom, and it's really good.
If you could go back in time and give your younger self one piece of advice, what would that be?
I think stay bold, make big moves, especially when you're young, because you never get that time back, right? And the bigger that you're thinking, the more bold you are. Like, don't sit around thinking about, if real estate's in your heart, like, go for it. Figure out a way to go for it and be bold, because you'll regret it. So I like the Bezos, regret minimization mindset, where it's like he'll backward design a lot of his decisions from when he's 80. So that's getting to your question, right? But like, you don't regret making big moves. I think you're going to regret going too small. So just stay bold.
So with that, to build on that, would you still start where you started, knowing what you know now, or would you try to jump into the larger multifamilies as quickly as possible?
Good question. It's hard to say. Probably go to the go to the bigger stuff. But I'm just coming up from a working class background, not a big network, not a lot of, family money hanging around. So that was our way to hack into it and really get after it and get some assets under our belt. So, some of it's just like, to us, that was big. That was big. If you had told me at 24 years old, I'm buying a 100-unit deal, some people could do this, and God bless them. But whatever's big to you at that point, that's what you should do.
What single strategy, process, or tool have you implemented that has had the biggest time-saving impact to your business?
Yeah, I would say by far it's just hiring 8 players, just hiring the best people you can possibly get, pay up for them, do what you got to do, give them a really great comp, like upside, hopefully equity upside, rather than just cash, and keep them motivated. And the A player is always going to give you most of your time back, because they're going to take on things and surprise you. They'll probably do stuff. Some of them will do it much better than you can. And that's the best feeling ever, because then it frees you up to do other things.
Building on that, it said you come from working class. Did you find it difficult to hire that first person and offload some of that work and see them as an investment versus an expense?
Yeah, good point. Yeah, no, totally. I mean, when you carry forward some of the middle-class mindset, the middle-class mindset's wonderful, right? It has a lot of wisdom to it, but sometimes you don't think in terms of ROI, which is what you're explaining. Like, the return on investment could be extraordinary, but you tend to, like, be more on the stupid side of frugal sometimes. I don't know if that's too rude, but like, yeah, you have to start into business thinking about ROI, and then experientially, once you get someone like that, you're like, wow, you know what? That transformed everything I was doing. So of course it was a good use of resources. So yeah, that takes time to unfold.
I like that line, the stupid side of frugal. I might have to try to steal that one.
Yeah, go ahead. You can have that.
Well, Dan, this was a great conversation. I really appreciate your time. Again, it is atxacquisitions.com. You'll find that as a clickable link in the show notes, but I hope you'll come back again sometime. I'd like to deeper dive on the property management side of things.
That'd be fun. It was great conversation. I appreciate your time.